Welcome back, folks. In this video, I am going to give you something that when I learned this, it completely changed the way that I started to look at the markets. Okay? A lot of people say that. There's a lot of fake clickbait titles in YouTube that have that statement. That when I learned this, it completely changed the way that I started to trade. But I'm going to give you the truth. Okay? And this is something ICT himself taught me. Okay? Very valuable. And it's going to be so simple that it will completely change the way that you look at the markets and really help you in identifying order flow. Okay, it's not technical. I'm going to really break it down and make it so simple that you will be able to use this almost every day. Okay, and it's going to be the framework that I used to take this trade. Okay, now this trade is quite technical. You know, order blocks and liquidity sweeps and fair value gaps and a whole range of stuff that I'm going to completely disregard and show you the easy way to read what's going on here, okay? And that is what ICT taught me himself, okay? I want you to look at this right here. This here is midnight, okay? That's when ICT says the market opens. What does the market do on this open? It immediately drops, right? It immediately drops, getting everybody to short. Everybody short that market when they see that, okay? But what's it really doing? All that move is doing is coming down to take liquidity. That's all it's doing, okay? Now, when it does that, what do you see? I want you to look at this. What does that look like? A complete mess? Yeah? Okay, let me simplify that, because if you can understand that, then you're going to know exactly where the market is going when it's taking liquidity, okay? I want to show you this picture. A picture of a shark. Don't get scared, okay? I'm giving you warning. I'm going to show you a picture of a shark mouth, okay? Think about when a shark takes a bite. Doesn't that look like a shark bite? Right? Let's have a look. Look at that. Look at that. Imagine this shark taking a bite out of that image, that chart, or this one. Imagine this shark taking a bite out of this chart. Is that what it would look like? Yes, that's exactly what that is, right? That mess is a shark bite, right? Is that smooth or is that messy? Is that smooth or does that look like a shark has taken a big chunk out of that chart, right? It's messy. It looks like a shark has bit into this chart. Imagine if that was a square and that was smooth. Right there. Okay? What's happened? The shark has come and taken a massive chunk out of that, right? With the shark's sharp teeth, right? That's exactly how I want you to think of the markets. That happens after when the market takes liquidity and after a massive dump like that. Okay? So that is the shark bite. Where is the smooth part on this chart? Ignore this, right? This hasn't happened yet. Whoops, let me grab a square. You've got to ignore this part of the chart because this is all future pricing. So ignore that, okay? And just look at this from this part of the chart, the left, okay? So when the shark has come down and taken a bite out of that chart, where is the smooth part on this chart? Where is the next area the shark can go to find more food and take a chunk out of that chart? It's right here. Equal highs. So isn't that clear? So the market creates equal highs. Look how smooth that is. And then, that's all before the open. Dumps down at the open. Takes this liquidity, okay? And then leaves this massive mess. A massive bite out of the chart. That tells you the work down here is done, okay? So, the shark's now looking for more food, right? Where is the shark going to go next? Right? So if you're looking at this, where is the food? The equal highs. Right there. Okay, go back and study the chart, right? Identify when there's been a dump down, okay? Don't worry about the time. It doesn't have to be at the open. This is just the example at the open, where that dump takes that liquidity, and what happens next? Does the shark take a big chunk out of that chart? And is there smooth equal highs above where the shark can now go and grab its next feed? Okay, that is the premise of my trade right here, okay? This is the technical implementation of that, but you can ignore all of the technical and simplify it and look for when the market has moved down quickly, taken some liquidity, and a shark attack has occurred, leaving all this choppiness and messiness, right? Giving you a clue of where it's going next. Because if it's done its work on the bottom, then it's going to do something up high, and you've got to find out where might it go next. What do you see above those highs? Look to the left. What do you see to the left above those highs? This fair value gap. Isn't that cool? Just beneath that fair value gap lies liquidity that the market will take to get to its real objective, which is that fair value gap after it's done all this work and damage down below, with the context of this dump, okay, coming in to take this liquidity, and look at that right there, a small little fair value gap, okay? The market's always moving to meet some objective, right? Once it's done its work here, with that shark bite, it's going to go back up here to get to that. How easy is that? Study your charts. I hope this video is useful. I will now talk with you in a future video.